Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What we got going on with the markets? Pullback? Pullback? We don't need no stinking pullback. Let's get this thing going to the moon, baby. Let's get those moon boys going. Look at this market is hot, right? They're going to print the money. It's going to keep going up. The dollar's going to keep going down. Look, it lost 12%. Stock market up 12%. This market's going to go to the moon. We get pullbacks of like 1%. 1%, is that really a pullback? No, I don't think it is. Now, my take still is we're going to see a pullback, but they're still going to crank this up higher. They're going to push it up higher. They're going to print the money. They're going to lower the interest. Lowering the interest rates at record high levels of the stock market? Are they insane? Have they lost their mind? Yes, I believe they have. Once again, that's just my take. Look, there's a problem out there. And you can tell that gold is just sniffing out that problem. It makes a new high every day, maybe every other day. It takes a day off every now and then, but then it goes up higher, right? Because it smells what they're doing, smells what they're cooking, and it's not good. I'm telling you. Look, they're going to continue to print money, to print money, to print money. It's a fiat debasement system. They're going to debase the currency. The currency's going down and down and down. And people just don't get this. Poor people get this. When they go to the store, they can't afford to eat. They understand. Look at the rich people. We love this, right? I mean, look at what it's doing to our gold prices. Look at what it's doing to assets. It won't let your house fall. It's going to stay right up here. But you got to hurry up and buy a house right now. Mortgage rates at 6.5. This is going to be your last chance to buy a house at the price that Billy Bob sold at, right? You got to hurry up and get that house before they come down. You see, here's the thing. What are they going to do? They're going to keep rates low, right? They told you they're going to lower the short end of the curve, but now they're telling you they're going to do, they're going to do yield curve control, right? There's no one in their right mind that would buy the U.S. bond market 10, 20, and 30-year bonds. Just not going to happen. Who's the only buyer? It's got to be our government, right? So, the Federal Reserve, they're not our government, but they're the only buyer of it. They're going to control it, right? They're going to keep it down. Now, if they let it run free, it's going to be 10, 12, 14%. So they're going to print unlimited amounts of money to buy this down to 10, 20, and 30 years. They're going to buy it down by printing more money, which is going to cause inflation. So the higher inflation goes, the lower the interest rate will be on the long end, because that's where they're printing the money to buy the long end of the bonds to keep the interest rate low. But you're going to see that inflation spike up again. I don't care what they say. They're talking they have it down to 3%. I don't believe that. You see, here's the thing. The Federal Reserve cannot afford to pay investors a real rate of return, right? I mean, they lowered the price of the bond last rate drop, right? Down to 4%. Now, you can get 4% on a bond, but what they don't tell you is they know inflation's at 8%. They need the market to get up above 8% to kill the inflation, get it up at 10%, but we'd be a bankrupt country. We'd be done. It'd be all over. So they have to lie to you, tell you that inflation's at 3%, the bond's at 4%. They say you're making 1% on your money, but you're not. If you buy the bonds, you're guaranteed to lose minimum of 4% a year. And that's what's fascinating now. Now you got Morgan Stanley. They come out and they tell people, hey, sell off half of your bonds. Sell them. Just get rid of them at any cost. Get them off your book. And what do you do with that money? Sell half your bonds, take that money, and buy gold. This is a major investment banker telling people to do this. This is crazy. Goldman Sachs is catching on, right? They're saying gold is like going to take off because it's the new safe haven. They know bonds aren't safe. People will tell you bonds are safe. No, they're not safe. Now, if you're buying bonds, I hope you're buying like 1 year or less, right? Because that way you get your money back and you get a little extra, right? But if you're out there on the long end, the 10-year, the 20-year, the 30-year, you're guaranteed guaranteed to give the government 4% of your wealth in those, invested in those every year, right? Because inflation, 8% minimum, they're paying you 4%. You got a negative rate right now of 4%. A negative real rate of 4% is what the Federal Reserve is paying you. Look, they're the problem. They've been the problem for over 100 years. Time for them to go, I say, but they're going to stay here. You know why? Because they're going to bring out UBI. UBI is next. That stands for Universal Basic Income. That's what they're going to do. They're going to print money. Why? Because poor people can't eat. So we're going to print money and give these stimulus checks out again. You see, they have absolutely no respect for the purchasing power of the dollar. They have no respect for it. They are going to debase the currency. They are going to blow up the debt market. This is so sad what they're doing, but they can't afford to do anything else because they're the idiots that caused the fire, and now they're going to tell you they're going to put out the fire by printing more money. They're going to put out inflation with money printing. How does that work in this? The world is upside down right now. Everybody can feel it. I can feel it. Look at, I'm getting rich, right? I got miners, I got gold, I got silver. I'm diversified between the three. Look at this 60-40 that Morgan Stanley's got is now 60-20-20, right? Sell off half your bonds, buy gold. 60% stocks, 20% gold, 20% bonds, right? That's their new allocation. It's been 60-40 stocks and bonds for the last 50 years, but we're going to change all that because bonds are not safe. And you know what they want to do? They want to shift the risk onto the public, onto the unsuspecting public. How are they going to shift the risk in the bonds onto the public? Well, we got these things called stablecoins. Stablecoins. Can you believe it? There's nothing stable about them. Nothing stable at all, right? The stablecoin is the gold coin, a 1 ounce gold coin. Will American Eagle's the way to go. You like the Canadian maple leaf. You like the African Kruger Ant. Any of them. Yeah, I love the buffalo, the American buffalo. That's actually my favorite gold 1 ounce coin. Those are stable, right? Those are stable. What they're talking about doing is shifting the risk of the bond market onto the unsuspecting public by getting them into stable coins. And of course, the Donnie's boys, Eric and Donald Jr., they're going to make billions, tens of billions, $100 billion selling you the stable coin. And it's going to be great because it's going to shift the risk of the bond market onto the general public. And this is just appalling to me, right? It's appalling to me, but that's what the stable coin is going to be. Now, you know what's interesting? The biggest stable coin is actually Tether. And I'm not as appalled with them. The reason being is because they actually own tons of gold. They back their stable coin both with the bonds and with gold. Now, would you rather have a stable coin backed by bonds or backed by gold? I'd rather have it backed by gold. I have, they call, what do they call Bitcoin now? Digital gold, really? Does about the opposite of what gold does. Look at it. It's not digital gold in any means of the word. You could have digital gold by having a vaulting system that's, they're vaults like in Switzerland and around the world, and they're going to have these, right? And there's going to be digital gold that is attached to the vault. But Bitcoin is another fiat, right? It's got nothing. It is nothing. It's digits on the screen. Don't get me wrong. It's going to go a lot higher. Why? Because we're going to print money, right? We got to get that Bitcoin on the moon also, right? We got to get that to 150,000. But when this all comes crashing down, it's like an upside down pyramid, if you can see it. The pyramid goes all the way down. What's at the very bottom? That's gold. That's real money. Everything else is an offshoot, right? And it just goes up and up and up. But when it all comes crashing down, all the purchasing power funnels into gold. Now, the government, they've lost respect for your purchasing power. And I don't know if they're going to shut down or not. What is it? It's supposed to be today, maybe, right? I don't even follow, they shut down. It might be better than they can't spend trillions of dollars. And we'd be better off maybe if they shut down completely. I don't know how it's going to play out. But look, they can't even balance the budget. I mean, is this sad? Is this pathetic? Is all they can do is raise the debt ceiling. You see, gold is attached to debt, right? You can go to U.S. debt debtclock.org, and you can see the debt just rolling over, rolling over, rolling over. We do a trillion every 2 to 3 months now. A new trillion is added on, right? And gold's attached to that. It's just going to keep going up with it, right? And anytime you see that debt clock go backwards, you just sell your gold, sell your silver, you get out, because that's the time to get out. But that's never going to happen, especially with the people we got in running the office now, right? They can't even get a balanced budget out there. I don't know, that's balanced budget. You got to go back to maybe Clinton, maybe before Clinton. I really don't know when the last time we had a balanced budget. Now, here's the idea. If you can't balance the budget, you shouldn't be allowed to run again. Throw them all out. Throw the bums out. Let's get some people in there that want to do the work, that want to balance the budget, that have some respect for my purchasing power, because my purchasing power of the dollar is going like this. But luckily, Tall Mike is in the real money, which I'm begging you to get some. Look, I know you can't afford, a lot of you can't afford gold. Some of you got millions and millions of dollars in gold. Some of you are wealthy, but most people can't afford gold now. They've been priced out because it's $4,000 an ounce, right? And silver, it's now $50 an ounce, right? About there, right? Now, you were going to get resistance at this level. A nice round number, 4,000, you're going to get some resistance. Gold's going to back off. $50 is going to be some resistance. Don't get me wrong. We're eventually going to blow right through that, but you'll get a little bit of selling pressure, because people bought for $50 back in 1980, bought for $50 in 2011. They're waiting to get out, right? So there's going to be some selling pressure once they get back to even. But they're going to be the fools if they sell at this point, because believe me, you're going to see triple digits, and a 1 is not going to be the first number on the triple digits for silver. I keep talking about 3, but it's really going to be closer to 5. $500 for an ounce of silver that you can get today below $50. But don't listen to Tall Mike. You get out there and you buy that fart coin. You get out there and you buy Ethereum. You buy that Dogecoin. You buy that Bitcoin. What is that Bitcoin? You got some digits and they go for $110,000? Really? Really? You don't want none of that silver, do you? No, that silver's shiny. That silver's pretty. That silver does real things, used in every aspect of the economy, but we don't want any of that. No, we want the Bitcoin. What does Bitcoin do? What if it went away tomorrow? What would you miss? Would the world be different? I say no. You get silver gone by tomorrow, the whole world crashes. There's nothing left. Silver and gold, baby. God's money. Man is a fool if he thinks he can make a better money than God can make, because he cannot. Look it, I'm a gold guy, right? But I'm not always a gold guy. I don't even want to be a gold guy. This is not good that gold's going up, right? It's going up every day. $100, $100, going up and up and up. What's the world doing? The world's crashing. The economy is not looking so good. Poor people can't eat. The middle class is getting priced out, but they're going to inflate away this debt, because that's what they got to do, right? The debt is collapsing. It's going to collapse. You watch the bond market. A lot of people don't understand this. The HYG, it's the junk bonds now. It's not ready to come down yet. You get that down below the 20-day, we'll start talking. You get down below the 50-day, we'll take a serious look. You get it down below the 200-day moving average, you run for the hills, because this game's over. It means that the bond market has just crapped out, as they say in the game of craps, right? I mean, it's done, right? And when it's done, the stock market is done. It's going to send your house done, going to send the interest rates to the moon, going to send gold and silver up along with it. Now, once again, this is just my take. People don't want to hear about it, but that's what I believe, right? That's what I believe. But what they're doing to us is just really sad. I mean, it's even pathetic, I can't make sense of it. We're going to keep interest rates low by inflating the money. Well, when you inflate the money, won't people want more interest when they loan you money? Yes, they will. But if we print enough money, we're going to buy every bond out there. We're going to be the last buyer. We're going to buy it all, right? We're not going to let this thing blow up, because this is where us rich people, the elite crowd, that's where they make their money. They can't let it die. So they got to keep that long end of the curve low, and they're going to print trillions and trillions and trillions of dollars and buy up the bond market. What's that going to do? Well, that's very inflationary, right? You're going to see inflation going. But they're going to hold the long end down with yield curve control. They're going to hold it down by inflating. They're going to let that inflation run. They got the white flag out. You know, gold can sniff this out. Gold is smart, smarter than Tall Mike, a lot smarter. You see it going up, and Tall Mike, he's making a lot of money, but he's unhappy because the whole world is going to, it's just not going to end well, right? I feel sorry for people. Most people out there are going to lose everything, and they don't even see it coming. I mean, they're just going to get smacked. They're going to get smacked and not even see what hit them. It's how fast it's going to happen. When it happens, it's not time yet. Not time yet. Watch that HYG. That's the junk bonds. HYG is the symbol. When that starts dropping, right now, they keep pumping the liquidity in there. Everything's fine. Everything's Goldilocks. Everything's golden. We're going to go to the moon. But once that breaks down below the 20, below the 50, and if it gets below the 200, game over. Pack it in. Time to go home. If you like this stuff, give me the thumbs up. Punch the subscribe button. Get out there, everybody. Have a great day. Bye-bye now.